Hey, I'm Adam Jusko, and this is Stock Screamer, and in this video we are going to look at Stitch Fix. Is Stitch Fix stock dead in the water? But before we talk about it, I would ask you to please subscribe to our YouTube channel if you're not already. If you have already, I thank you for doing so. So Stitch Fix today, as I make this video in mid-December, is having a bit of a rebound after a terrible day yesterday, the day after it had reported earnings. Now, back in September, the stock peaked at over $50. It is now in the low 20s. The interesting thing is the earnings actually were pretty good. Stitch Fix had a pretty good quarter, at least in terms of earnings and earnings per share. The problem is that growth appears to be slowing. So while Stitch Fix has reported over 2.9 million active clients, and that is 20% plus more than they had a year ago, when you get into the sequential quarters, they are not adding customers at the same rate as they were in the past. And so that has kind of spooked some potential investors. And they also said for the quarter coming up that they don't expect there really to be a whole lot of difference. So they're, we're kind of suddenly, in terms of increasing numbers here, going at sort of a steady pace, but not as fast as it was before. So they're still growing. It's still a nice business, but the problem is that Stitch Fix is priced as a growth stock. So it's looking, you're looking at a price to earnings ratio right now of between 65 and 70, which is the kind of PE that a stock gets when it is growing very quickly. So in order to justify that price, you have to continue to keep growing quickly. And Stitch Fix, you have to wonder if it is sort of hitting a place here where it's going to continue to grow, but is really going to ramp down. And you are going to be looking at a position here where that price to earnings can no longer be justified. You could easily see this stock price going down 25%, maybe even 50%, if that continues to, sort of get to a more rational place for what you would think of for what is essentially a retail stock that is sort of being priced as if it is a tech stock. It's looking for a huge amount of growth here, and obviously it is an internet business. But if you really look at where the PE is and where their growth may be headed, there could be a significant downturn in this stock still to come. Now, if you don't know, Stitch Fix is one of those companies that, what do they call it? Like a personal styling service. They send you a box with, certain clothing in it based on your preferences and probably some of their own recommendations based on what they know about you. You keep what you want and pay for it, and anything that you don't want, you send back. There's no shipping charges one way or the other. So they make it easy that way. Now, the only kind of, hassle is the fact that you still have to get it shipped back, but you don't have to pay to ship it back. So from that perspective, it's fairly easy. And it's sort of a fun business in terms of, getting those clothes coming to your door and not knowing necessarily exactly what you're going to get and trying them on and figuring out, what you want to keep. But it feels like a business that has a ceiling in terms of, the number of people that really want to shop that way. And I feel like it's going to hit that ceiling, sooner rather than later. How many people really want to shop that way? Is this, a fad? To me, it's sort of a scary business. The idea of getting these clothes is sort of a fun thing, but I think over time, people are going to tire a little bit of it. And this is not necessarily a sustainable model for the long term. So to me, it's kind of a scary stock. I think Stitch Fix is going to have to find another, tangential business here within the retail sector to get into in order to, really make this a stock that, the price is justified based on where it is right now. Again, not a bad business at all, but it's a public company that is being priced as a very much like a growth stock. And unless they kind of, come up with another way to really spur growth, getting more money out of the people they have is not going to be enough. They're going to need more people. So to me, at least, it feels like they're going to have to find, tangential businesses where they can really add some money on here, because I feel like that, that growth that they're getting right now in terms of the active users, that slowing down, I don't believe, is a you know, a short-term thing. I think that is going to continue to happen, and they'll have a, you know, a nice, decent business. But if they don't do something different, they could easily go the way of Crocs, you know, having something that is hugely popular and is, you know, hugely interesting to people for a short period of time that then just crashes and burns. And so they are going to have to try to come up with ways to, you know, kind of head that off, I believe. Otherwise, their stock is really going to be in trouble over the long haul. I would not jump into it right now. Would love to hear your thoughts on it. If you have any, you can leave those in the comments. Otherwise, we'll see you next time. Thanks for watching. Bye.